Welcome back. Well, let's get a check of what's playing out on the African continent now with most of the markets that we track. We're seeing the NGX there. Nice close for yesterday. If you look at the data there, we got a nice rebound, if you can call it that. From Monday, we had a drop, we had a rise there for the all-share index. And fast forward to Tuesday, there was a drop. Wednesday came with a big jump, and definitely fingers crossed for today. But for intraday trade there, we're seeing the NGX still holding up, and 0.04, just a marginal drop at intraday. South Africa index also following with a marginal drop, 0.05%. Other markets we track in Africa, talking about the Nairobi Stock Exchange. I have some news there about Nairobi later on. 1.22% down. That was the close for Wednesday. And Egypt intraday 0.47% up. All right, let's get a check on what's playing out with the markets right here in Nigeria. As a stock market, we have at FBN Quest. Hello, Abiodun. Great to have you.
Hi, lad. It's good to be here.
Yeah, so it's the earnings season that's heating up right here and globally. I'm looking at the market right now. Which earnings are catching your attention so far?
The market is waiting for the banks. Obviously, we've seen quite some impressive numbers released by a few companies. One major outstanding one is Northern Nigerian flour mill, and I think the market is currently responding positively. The stock is trading at its limit up price today, 10%. Investors are paying 10% on previous close based on the earnings that has been released. But pretty much all fingers are crossed. Everybody is waiting for the banks.
Right, and talking about fingers being crossed there, we saw yesterday Ardor Holdings, quite an impressive outing there, about 10% gain, and I guess that was on the back of their impressive earnings.
Yeah, quite surprising also from Ardor. Of course, it's been attributed to improved oil production and sales they did in the last quarter. Very, very impressive. The market has actually stabilized, and we want to see what they will do in terms of corporate actions.
And from where you're sitting, looking at what's playing out at intraday, we're seeing a marginal drop, about 0.04%. What stocks are getting the attention of investors right there trading?
It's just been profit taking in select names among the banks. Of course, we've seen some French stocks also trying to take position, investors taking positions among them. Can't really take so much out of it because it's just about 4 basis points up. Anything could happen. The big heavyweights are still on the sidelines, your MTN, your Dangote, Cement, Etel, and quite a number of them. So it's a bit too early to say.
Right, I'm talking about Dangote Cement. A couple of weeks back, I did see a lot of profit taking on that stock. We've had one outing of profit taking on Dangote Cement. What's really going on there? Why are investors trying to take profit on that stock?
Okay, the stock for a very long time was actually not trading, and the reason was because buyers could not pay at the price which were being quoted on the board. But once the stock was able to get some prints, the stock is trading right now. So it's basically some trading rules that's prevented buyers to be able to buy the stock, but right now it's trading fairly.
And, going forward, do you think there's going to be more profit taking, or at some point, they've reached the bottom? That's for Dangote Cement? Or is the bottom close at some point?
I think the only way from here it should be up. We expect the company to do well in Q4. And of course, they're also very generous with dividend. I think the only way from here should be up, all things being equal.
And you did mention the banks, that investors are waiting for the bank earnings. What risk are you seeing, or do you think it was smooth sailing for most of the banks in 2024?
2024 is actually a very, very a mixed year. But for the banks, they did very, very well because whether the currency is witnessing depreciation or not, you understand, they have it in their vaults and they reprice according to what the reality is. Interest rates has gone up, they have wider margins to be able to play with. It's a good time for the banks, and every smart investor know that this is the place we have to be.
And it seems we've been seeing stability, according to the central bank governor, there's been stability with the naira since June of 2024. Is that bullish, for the banks, the stable naira?
Yeah, the thing is, it's good for the banks, and also one thing that it's going to help them going forward. These ongoing and some completed recapitalization exercise. It will enable the banks to be able to undertake bigger projects, bigger transaction alone rather than going on syndication and what have you. It's going to create a bit of stability. It's going to bring a little bit of confidence. You understand? The banks have capacity. Also, it's going to help invest in technology. You would have seen quite some banks also, change their core application in recent times to some like GT Core. So going to the Finacle core application. It's only going to be positive for them.
Right. And talking about being positive for them, we're seeing we had the first rate-setting meeting in the U.S. It's a hold for now, and Jerome Powell did, give some forward guidance, and it's like he's not in a hurry, to cut rates more in 2025. Do you think rate cuts or rate hikes, or if this pause continues, do you think that's, bullish or bearish for Nigerian banks in 2025?
From where we stand, in terms of rates hike or cuts, of course, MPR has been postponed to next month. Whether you cut, whether you hike, the banks would always try to keep a very, very healthy margins, and they are very, very good at it. They'll pass it on to the customers. The banks would always want to survive because they are the engine room of every economy, specifically a country like Nigeria. So you'd expect that the banks will continue to do well. But, because 2025 is going to be riding on a higher base effect of inflation relative to what happened in 2024, you'd expect inflationary pressure to decrease, and inflation being the key driver of these rate hikes you've seen. So we expect that, even though the central bank would have to cut rates to be able to stimulate growth, especially in the manufacturing sector, the banks will continue to maintain their healthy margins.
All right, we'll keep an eye on those banks and their earnings. Thank you so much. It was great having your perspective. Abiodun Adedotun, sales trader, FBN Quest. Thank you.